So, hello and welcome you to today's Trading Spotlight webinar here together with Admiral Markets on Monday. It's the 11th of November 2019. And some of you might be surprised, not those right now watching the recording, by the way, on the YouTube channel, but those who joined us here at the live event. Usually on Monday, this is Paul's slot, but we changed, we switched because in Germany, where I'm located, I'll dig deeper into this in a few seconds during this introduction. In Germany, on Friday, the day when I will usually be the moderator of the webinar, we have the biggest trade fair here in Germany, in Frankfurt, called the World of Trading. And but also Marcus Gabel, who's the moderator on Wednesday, then we will be present there. Unfortunately, if I'm present there, I can't hold the webinar, but Paul, Paul was able to take over, and so we just switched the topics. And today we want to look at the following here: how to successfully use expert advisors in your trading. So at least I want to say we want to have a look at how I use expert advisors and also successfully use expert advisors in my trading. So there's probably also other ways to use expert advisors, but just that there's no misunderstanding. Let me just see, are there any questions? No. So right now, okay, perfect. So just one question. Everyone can see my screen. Everyone can hear me well. So usually this shouldn't be an issue, and everything should be fine. But perfect. Everything's working well. So yeah, then let's start. Let's have a look at today's agenda. I think the topic is very interesting, and I think it's also a topic which is very interesting for many who are not only using EAs or expert advisors in their Forex trading, but also in other markets. Especially me, for example, I use expert advisors in my DAX trading, for example. And yeah, so today's agenda, we will look at the following questions. So what are Forex robots, respectively expert advisors, and how do they work? Probably some of you haven't heard about this before. Then we want to answer the question, what are the benefits of using expert advisors in your trading? And surely there's also another side of the coin here. And therefore, we want to look at the criteria to assess your readiness for coding, respectively buying a Forex robot. This is a very nice way to put it. So there's also lots of bad, let's call it, expert advisors out there. You can usually get them for free. Some of them you have to pay for. And at the end of the day, you're not getting anything out of it in the long run. So this is also something we want to have a look at here. And then also, and this is especially something where my personal way to use expert advisors in my trading comes into play, examples of how you can use expert advisors in your trading, especially those where we then try to combine the expert advisor who is probably already profitable, proven profitable, and has or is trading a very robust trading approach, and how to optimize the expected value. So before we start, sure, we could now dig deeper into me. I already said at the beginning what I want to look at here, that I'm located in Berlin in Germany. So that's one of the reasons why I'm then not here on Friday, but in Frankfurt on the World of Trading, where you can also meet here Admiral Markets. And this is the company I want to definitely have a look at here, because everything here being presented, everything which is made possible here, the access to traders, their knowledge, their experiences is made possible by Admiral Markets. One of the biggest Forex and CFD brokers, most established Forex and CFD brokers in the industry now. They are in the market. You can see it here, 2019, it's 18 years, so since 2001. So definitely lots of experience. Not only that, but also different licenses here. Not only FCA regulated, or also SISIC regulated for the European area, but also, for example, ASIC regulated. So Australian regulatory body who's overlooking the business Admiral is doing. Especially here in Germany, there's also something, I already mentioned it, I'd really like to mention it over and over again, because it's just noteworthy. Admiral is one of the most competitive, if not the most competitive CFD broker out there when it comes especially to DAX trading. So they have a typical spread of 0.8 points during the main trading hours. And it's not only that, but there's also an offering we call Admiral Markets Prime or Admiral Prime. And here they have a 0.2 spread with a commission on top of 60 cent per CFD, so that the typical cost is still 0.8 per DAX CFD you're trading. But and this is the thing, this is something which is noteworthy because, and at least here and in Germany, I do not really know whether there's a broker out there who has a more competitive offering when it comes to DAX trading. And this is especially true for retail traders who are looking not only for a good order execution, which you have on top of that, but also for as low trading commissions as possible. And that's one of the reasons why you should definitely give Admiral Markets a deeper look. That's one of the reasons why we here in Germany usually refer to Admiral as the DAX expert. I'm not saying that they're not competitive in terms of FX trading. That's definitely not true. So FX trading is also highly competitive, but especially the DAX is something which is standing out, especially when it comes here to German traders. And in Germany, we usually see the highest turnover volume being traded in the DAX. So that's it. And so now let's start with here the question: what are Forex robots? So FX, Forex robots, and how do they work? So very important, probably. There is, or I realized over the years that there is a differentiation between expert advisors and Forex robots, even though I'm not really, to be honest, I don't really understand where the difference comes into play. So I refer here to Forex robots as an equivalent to expert advisors, where anything else when it comes to algorithmic trading and which algorithm you might use here. So FX robots, expert advisors, everything. This is all the same, or at least for me. Similar to the webinar last week when we had this combination of fundamental analysis, technical analysis. When I said fundamental analysis, economic data, market data, whatever you might call it, at least for me, it's the same. So what are FX robots? What are expert advisors, and how do they work? So an expert advisor is an automated trading system which automatically opens and closes trades based on preset rules. So sometimes I get the question, for example, also at the World of Trading last year, I remember really well standing there giving a presentation, and afterwards there was a man coming over to me, smiling at me and saying, okay, so but if you're such a successful trader, could you please tell me one thing, why you're standing here and holding a presentation and not sitting in front of a screen? And I said, well, it's very simple, because my trading is automated. And the reasons why I do that, by the way, will come out over the next minutes, but this is how I trade. So this is the same, which is also true right now. I'm running a so-called VPS, a virtual private server. That's something also we want to dig deeper in the next minutes. And I'm running an expert advisor, which is right now taking care of my trading, in fact. So I entered the market based on these preset rules, and I will exit the market given on these preset rules, in fact. So surely there is a chance for me to intervene, but have a look, especially, for example, at the price action in the DAX right now. You will see that volatility is very, very low, and right now there's no real need to intervene. Surely I have a ticker running here, and then I can see once the market moves strongly in one or the other direction. If it moves in my favor, then probably I have a reason to intervene. If not, well, I just work with a so-called make or break approach, we can call it. So meaning if I get stopped out, I get stopped out. I know that this is only one trade of lots of other trades, and so this won't break me in one way or the other, in fact, because I have the chance to intervene, not only, by the way, in terms of trading, but also in terms of the money management algorithm I'm using. So this is right now you can really well understand what my trading is based on. So there's probably a small discretionary component, which means I have the chance to intervene, and it will show you how to, but still most of my trading is really automated. And So here you can now see, this is the differentiation I was referring to, FX Robot Expert Advisor. So a Forex Robot is a program that can identify market patterns and generate trading signals, which can automatically trade on a trader's behalf. The thing is that both are very similar to me, in fact, and identical, because also here, the expert advisors, you can code it and you're searching the market or the asset you're trading, you're searching it for exactly that, a market pattern. For example, open range breakout systems. You can say this is a pattern. You look at the trading range every morning, or at least here in Europe, or German time, every morning, and you have a high and a low, and then you're trading in relation to an let's call it advantage identifier. We can call it, or this could be, for example, an exponential moving average, for example, and then you just say, okay, if the market is trading above this EMA here in this case, so the exponential moving average, and the breakout on the upside occurs, then I'm going long. If I trade below, the breakout occurs on the downside, I go short. That's it. So it's in fact then the same, because you have these rules coded here in this expert advisor, and you're looking for the pattern, which here is defined as a Forex robot. But all in all, you can see that it's very, very similar. In my case, in fact, it's in fact the same. So let's have a look at the benefits now of using expert advisors. And you can already guess what's one of the main benefits, because it's quite clear. If there is a computer which is generating the trading signal, there's obviously no emotion involved at all. At least not when it comes to push the button and enter the market or exit the market, because the computer, respectively the algorithm here, is taking place about everything. So this means that you're reducing cognitive biases, for example, like loss aversion, hindsight bias, and etc. We already had webinars on these topics. So cognitive biases were a topic, a big topic, in fact, and I invite you to look especially at the YouTube channel from Markets here, scroll down and have a look at one of the webinars 1, 2, 3 months ago. I'm not really sure, but we were talking quite intensively here on cognitive biases and especially loss aversion. So to just give you a small, let's just recall what loss aversion is. That means that you overweight losses, and the pain you have when facing a losing trade is higher than the joy you feel once you have a winning trade. So to put this in numbers, there's a rule of thumb where you could say, for every euro you're losing and the pain you connect with losing this one a euro here, or this one unit, whatever, you have to at least gain 2 euros, depending somehow on the individual character here of every trader. But on average, rule of thumb says 2 euros. This is what you have to gain to feel the same level of joy when it comes to winning, as on the other hand, you feel bad when facing a losing trade, in fact. And that's one of the main reasons why especially retail traders have trouble to let winning trades run and cut losing trades short, in fact. So to get over this and not being in a position here to sit in front of the screen and thinking all the time, do I really want to give back some of my gains right here, or what about my stop? Probably the market tends to now fish me out of this position, whatever. An expert advisor, once you run it and you're not sitting in front of the screen, takes care of everything, and you have no real control of these interventions. At least, yes, you can. Sure, I could show you a position now, and I can decide whether I want to keep this trade or whether I want to take it out. So. And this is one of the reasons why I'm not writing you taking out those emotions completely, because it's only a reduction. At the end of the day, you still have control about the position. But all in all, you can say that you're getting rid of these potential negative emotions. The same is also true for hindsight bias, for example. Hindsight bias means that you, just the following example. You look at the chart and you say, okay, I'm very, very sure that Euro USD will gain. Let's say from the current levels. It's something around 110.40, 110.50, if I'm not mistaken. And you say, well, we have to gain from here. And then after, let's say, 2 weeks, we have whatever decision being made from the Fed or whatever economic data coming in, and the market, Euro USD, really took off from these levels. And you look at the chart and you say, see, I told you Euro USD will gain from here. Now the question is, did you take the position? No, you didn't. Why? Because you weren't really sure whether the market will gain from here. The same is true also from, it's probably even a better example. Look at, for example, the election from Donald Trump in 2016. So right today, we might say, well, look at the country, the U.S. in general, how divided it is. And some might also say, well, all these politicians, they only look at their personal gains. This is something you don't really or only see in the U.S., but you see it all over the world. Look at Germany, for example, or look at Europe in general. Look at all the criticism in regards to Brussels, for example, the pressure being held on, or at least the pressure you might right now feel, which is hold very, very high, or at an elevated level, let's say, when it comes to the Brexit negotiation. So everyone is just shaking their heads, and it's like you have the feeling that the Britons are just an example, or you want to use them to have an example where you can say, well, don't dare you that you will think about having something like an Italy exit vote, for example, Italy leaving the European Union, or the Grexit vote, Greece leaving the European Union, or Dexit. I think there was also the Germans leaving the Eurozone, whatever. So this is what you can somehow feel here. But the thing is that looking back at Donald Trump and the election here, so everyone today is sure that Trump, there was no other choice than electing Trump, and that Trump becomes the 45th president of the United States. But if you look at, okay, today is bad. It's not 2 years, 2.5 years ago, 3.5 years, by the way. Sorry. You ask the same question. Do you think Donald Trump will become the next president of the United States? And no one would have answered this question with yes. So I myself, so today I say somehow yes, but I really well know that 3.5 years ago, I was sure that probably it would be a close call, and probably it won't be as clear as many have thought. But at the end of the day, I really thought that Hillary Clinton will make it. And this is also something which is all the way, which you can today see, for example, when you listen or read through books, how prepared the let's call it Team Trump was. So as far as I know, they haven't expected to win this election too. And this is what we call hindsight bias. So if I ask the people today, they give this a higher likelihood to happen based on the final result than they would have given the likelihood 3.5 years in this case of Trump again. Or based on trading, Euro USD will gain from here in 2 weeks. I ask you, Euro USD really gained, and then you will say, yeah, sure. So what has this to do with expert advisors? You have no chance to do that because this is an automated system which will generate the trading signal, respectively enter the trade, no matter what. They don't ask you, what do you think? What do you feel? How do you feel? No, they just, the expert advisor just enters the trade. And this is something which is reducing then also cognitive biases, respectively emotions in your trading. And this is something I have seen plenty of times. So it's not only that I'm trading the markets, but I'm also doing market research. And I look at the market and I have an opinion on the market. So it can be that I'm, for example, long the DAX, but the system I trade is short, or the other way around. And I'm really happy that I don't have to take this decision anymore because the market just moves in the direction the market wants to move. Sometimes I'm right, sometimes I'm wrong. And I can tell you the times when I'm wrong and the expert advisor, respectively, the system is generating a winning trade, I feel really happy. And these are the moments I remember, yeah, sometimes with a smile. I mean, it's always nice to have a winning trade here, but it illustrates really well how important it is to automate your trading to some extent. I mean, you can also be an automated trader or follow preset rules as a discretionary trader, but at least you have to finally push the button or you have to click the mouse. And most or at least people I know, traders I get to know over the years, have trouble doing exactly that. Just click the button, because at the end of the day, you're human and you're emotionally driven, and this is definitely something which you have to take into account, and which is underlined several times again and again and again. If you keep on trading based on an expert advisor, that you can see that emotion, the reduction of emotions in your trading is a very important topic, in fact. And also here, this is something I already talked about, the VPS. This is a virtual private server. It's also, I don't really know. I think, yes, Admiral is offering it. I'm not sure whether it's connected to a certain amount you have to have in your trading account, by the way. I'm not really sure. Some might probably get it for free because they have 5,000 or something deposited. Some of them or probably it's only 500 of you. I don't really know, but it all refers to the same. VPS means virtual private server. It's like a remote connection you have, and so you have a computer as a software on your computer if you want, and you can exit this computer. Shut down your trading platform, and still the EA is running, which is very important. In fact, if you're running an expert advisor on your MetaTrader and you close the MetaTrader, no trading signals are taken because the connection is interrupted. So this is crucial here to consider, the so-called VPS solution, virtual private server, and this makes sure that you're then trading 24/5 consistently all the time without interruption. Okay, depending on the service you're using here and everything. So this is also something you have to take into account. It's not that you just click the button and leave the office and just think, okay, then I'm done with my trading for today. I highly recommend keeping a close eye on the stability of the VPS in this case, because again, if the VPS shuts down, there's no connection between the MetaTrader and your computer anymore, so it's not running anymore. If it's not running anymore, it's no trades are taken. So this is definitely something you have to have a look at here. But it's again not as trading sitting in front of a screen, but it's more like you have to make sure that your system is running well. So system in regards to the technical side here especially. And so yeah, what does this mean? It means that you have consistent rule-based trading of several markets on also strategies with no need of human intervention. This is also something which is probably important to note. I mean, even if the strategy is very, very simple, it's still very important to probably automate it, especially if it's possible to automate it, because now you can trade different markets and all trades are automatically generated here. And you don't have to make sure that you're taking this signal and then you're probably losing control, let's say, of the whole process here, because you have now clicked the wrong button, and that's why you have to change something, and then you can't look at the other market where the same signal is generated, let's say 2 minutes later or something. But by automating this process with an expert advisor, make sure that all trading signals are taken at the same time based on all rules you have given, and you know if you follow these consistently, you're trading with a positive expected value, and based on that, you're overall capitalizing on your advantage. So this is what I already said here. However, the trader has to monitor some aspects such as their internet connection to the VPS, market conditions, which also means, I mean, the market doesn't know. Let's put it very simply. The market doesn't know whether it's trading high or low. Let's look, for example, at the current conditions at the Dow Jones, the S&P, the DAX. So over the last weeks, markets have seen only one direction, running up, and it's only a question of, if you look at the market, you might say it's only a question of time whether when a new all-time high in case of the DAX is hit. So it's very, very extended. It looks very extended, and surely the question is, do I really want to take long engagements, especially here, because the market looks already very extended, and it's also very long biased already. So which means that many are currently calling for new all-time highs, and the more people calling for higher highs in the market, the more likely it becomes that the market will rather sooner than later see a corrective move. So having this in mind, there's a chance then to intervene. It's, for example, not by taking out the expert advisor, but keeping on trading the signals, but reducing, for example, the position size you're taking. This is already something we can call discretionary intervention, something I will refer to in more detail a little later. But this is something I also recommend to monitor. It's not just you click the button and get the EA running. Also, there's something very important. For example, take a look at how your trades are filled. So slippage can be a big, big topic. So in my case, I'm trading with Atma Markets because here, in this case, by trading the signals, I don't face these issues by slippage. Sometimes I have 0.2, 0.3 or something, but I've also traded with brokers where you have 5, 10 point slippage. So why you might say, okay, this is probably something to worry about or to be a little peeved about, let's say, if you have this once or twice a week. If this happens over and over again, and even if it's just 2 point slippage or 3 or 1.5 or something, it adds up, and it's performance you're losing at the end. And I can tell you, markets are very, very efficient, which means, on the other hand, if you're losing 1.5 to 2 points per trade, this could be the 1.5, 2 points at the end of the year, if this happens, let's say 100 times, which makes the difference between winning and losing. And so this is one thing you also have to monitor very closely. So have a look at how your trades are executed. If you don't have the execution needed for your system to perform well and with a positive expected value, you have to make sure that you change. Or you change not the system, but you change, for example, in this case, the broker. So if you have trouble by that, or with that, in case of order execution, it's your responsibility as a trader to make sure that the execution aligns well with your traded system, in fact. And also here, it's also something which is important. If the broker's product offers leaves room, or the offer from the broker leaves room for an adequate risk management-based trading of the expert advisor. What do I mean by that? In case of Atma Markets, for example, you have a broker which is offering micro lots. So in case of the DAX, it means nothing more than you're trading, or you can trade as low as 10 cents per DAX point, which means like you're trading micro DAX CFDs if you want. Some brokers don't offer that. So some say, okay, we only offer €1 per point DAX CFD, so a full DAX CFD, which is completely fine. But you have to make sure that you're trading here in this case, where your trading account especially, is well capitalized to make sure that you still can follow adequate risk management based plan. Yeah, so by the way, Swajunas, I just saw your question. So where to get these robots? And also, I know I haven't yet answered on your mail. I've received it. I plan to answer it, but there was plenty of work to do. So the thing is, I will answer it, yes, but to give an answer to your question, you have to find a company probably which has a team of coders here, which can then, based on your given rules, program the expert advisor. Or if you're a coder yourself, a programmer, then you can also program it. And I can say MQL, for example, is very similar to C++, I'm sorry, yeah, to C. So it's very, very similar. So if you're familiar with this, it's probably not a very long jump to the other programming language, in this case MQL. But this is also something I recommend to everyone, because there's usually, and this is the individual character from every trader which comes out here. Sometimes you might say, I want to, for example, trade the EA from Jens based on whatever. So I say this is what's in there, and you can adapt some aspects. I try to make sure that the system is not too complex, in fact, because the more components you can, in this case, manipulate, the more, let's call it, unstable the system becomes, in fact. So I try to trade very simple systems to make sure that I do not have many ways to manipulate the strategy, and I make sure that over a very long time span, I can see that there's a positive expected value. I capitalize on a strategy. I can make money with, or see a rising equity curve. In fact, even though I also know that there's another way to test the strategy. So let's say I have a key parameter which I find out to be optimal in terms of capital growth in relation to the drawdown I face. And then I test also the strategy within a neighborhood. So let's say this optimal capital growth in relation to the drawdown is generated with an exponential moving average of, let's say, 20. Okay, so you have EMA 20, and then I also make sure that I have the same, where at least a solid result with an EMA 18 and also one with EMA 22. And then I can say within this neighborhood, if these results are also positive, I have an approach which is stable, which is robust, in fact. So this is just something I'd like to mention here in this regard. So yeah, and there's still chances to intervene, but they're not on whether to go long or short right now. But this is the system which is generating a signal, and what you can manipulate or where you can intervene is, for example, when it comes to the position size you're taking on the trade, or if you if you're probably not really d'accord based on, for example, political and developments, economic data, which was published shortly before the trade is probably entered, that you say, okay, well, now it seems as if, for example, there's big monetary policy intervention. Several central banks are communicating a very dovish stance. So probably it doesn't really make sense to short the market here right now, but we should expect the market to at least rise short term, and then you probably could also skip a trade and intervene here. So criteria for automating your trading. So this is to some extent already the answer to the question from Swajunas here. So let me just see. Okay. If you're a programmer, okay, you have to have an idea for a strategy, which means you probably say, okay, I've seen this pattern happening in this and that market over and over again. Okay, let's program this based on these rules. For example, if the market breaks out of a range which is here defined within this time period, and is trading above a certain exponential moving average or whatever, I've seen that the market continues to trade into direction of the breakout for a min risk reward of 2 to 1, let's say. Is this something I've seen this, let's say, 10 times? Let's say I program this and test it with enough data which is available, or which is given to me. And if this is then something which is not working on 10 times, but let's say on the last 10 years, then you probably have found something which is worth following. That doesn't mean that the next trade is a winner or a loser, but it means that over time, there's a positive expected value given to this strategy or this pattern you just recognized, and then you start trying to capitalize it with an adequate risk and money management plan. So when running a test, then take into account the data quality, also something which is very, very important, the execution speeds, whether you have debugged the strategy, and also whether you have a stable MT4, MT5 connection. This is also true when it comes to the VPS. Data quality is also something you probably have heard that high quality market data is something which is not easily found on the internet, or you can easily find it, but then you have to pay a quite high price for this. And there's a reason to that, because data means you have some chance to find such a strategy and not just test it, but then also find a solid approach which is worth to follow. And this is something which you should take into account here. So the data quality given initially in your MetaTrader, for example, is not necessarily good quality data. And very high quality data is something you have to find yourself then, in fact. And at the end of the day, it could be that you also have to pay a price for this. Execution speed, also something which is very important. And there comes this word slippage into play. So just imagine you have a approach which works really good in a backtest environment, in a demo environment, and you might say, hey, great, I've already had the backtest execution here. The only problem is if this execution cannot be found or is not the same, the execution itself is not the same in the real world, but there you have slippage. There is a delay in your execution because of the LPs, the liquidity providers, the brokers using everything. Then you will find out that the idea is probably a good one and a profitable one, but only if the execution speed is good and only if the slippage is low, respectively, commissions are very low. That's one of the main reasons, in fact, and it's interesting to see that after years, I found it out myself. Many say they are in fact arrogant enough to say, I can overcome the commissions and the spread and everything because my strategy just performs that well. And then they find out, no, this is not the case. So in fact, it's really, really difficult to overcome the spread and the commission, which means, on the other hand, nothing more. We don't go into too many details here, but which means nothing more than look out for a broker which offers you the best execution and also the lowest commissions possible, and the combination between these two. Because at the end of the day, a broker might say, okay, I give you low commissions, great, but if the execution sucks then, and you have slippage, let's say, of 5 points by only paying half a point spread, it means at the end of the day, you pay per trade, you pay, let's say, 5.5. In case of Admiral, for example, over time, I know this for quite a while now, the price I pay commission plus spread slippage, it does not exceed 1 point per CFD in terms of cost I pay per trade, which makes it possible that I can capitalize on my advantage. This is, I can't guarantee that it's true for everyone. It depends highly on the traded approach. But in my case, I found this out now for quite a while. So I'm looking at least 6 months of data minimum, and I can say this is really, really good, what you get there. And this is something you have to keep in mind, especially when it comes to an automation of your trading, in fact. So then you want to buy an EA. The question, I look at it from another perspective. The question is then, who am I? And what do I mean by that? Well, it's the question, we looked at this already in Traits of a Successful Trader. Which strategy style suits your personality based on your personal risk profile? So some might say, some traders might say, I'm a trend follower. So then they probably have trouble with range-bound trading systems. Then there might be breakout traders like me, for example. I've already explained this. I don't want to dig into too many details here, but I can say I'm really comfortable trading breakout strategies, and I'm also really comfortable in taking these losing streaks as part of the game, even though it doesn't mean that I smile at the market and I say, hey, great, I had a losing trade today. So this is not true. This is definitely not true. It's not the case, but I can cope with it really well. And if you're not that character, you will have trouble also trading with such an expert advisor. You have already trouble with a discretionary approach, but you won't overcome this trouble you have with a certain trading approach by just using an expert advisor, because it has to correspond well with your personality. If it doesn't, it doesn't matter whether you're a discretionary trader or an automated trader or following an automated trading strategy. At the end of the day, you just have trouble to follow the strategy. And then also, are you okay with an algo taking nearly full control of your account? It's a very important question, because if you have trouble giving control out of hand, which means that in this case, you're giving away the control of clicking the button. And they have the tendency to say, as long as I have the chance to click the button myself, I have control. In fact, now from a psychological perspective, you can also say or see with several experiments being run over the last years, decades, that in fact there's a question: do we really have control over our actions, or is there probably already the result and the action we will take taken by our brain before we then finally decide on what we do? But this is just a philosophical question, respectively also one from a scientific perspective here. Some people are just not familiar, but don't really feel well by giving up this control. If you're not that kind of guy, you will have trouble trading with an expert advisor, in fact. So now I want to answer the question how I use EAs in my trading. And therefore, we look at the SP 500 CFD open range breakout. This is the system I'm trading also in our Traders Yard community. And then we know that it's already a proven profitable strategy, and this usually enters fully automated the market, okay? But then, not in case of the traders community, but in my personal trading, I allow myself to discretionarily intervene based on my trading experience. For example, skip a trade where the strategy would generate a long signal, but market conditions are, for example, strongly short. That's what I already referred to. And then I also answered the question here. For example, if I want to manually trail a stop, for example, so not go for the make or break approach, but then also say, okay, if the market now is, let's say, 1 R, move 1 R in my direction, I move the stop, let's say, to break even, because I can't afford to let the market then turn around for whatever reason, let's say a Trump tweet or whatever, and I'm losing 1 R here. So I have the chance to do this, and especially if it's profitable in my trading, in fact. And then the target of all this, in fact, is to optimize the expected value of my already profitable basic strategy. And now you might say, okay, and how can I do this? Therefore, I do the following. So I do this. I trade 2 accounts, in fact. So one is the real account I'm trading. So this is my real money account. And then I have also the basic account, which is a demo account. So I'm running my expert advisors on the live account and on the demo account. And then once I intervene, which does not happen that often, but if the market allows me to intervene discretionarily, I look at how I perform here in my live account where I do this in relation to the basic strategy where I don't intervene. So I'm not taking any action in this basic account, in fact. So what this is then, or what this means is, if I'm doing better, I write down the result with the plus R in this case, where R is a risk I'm taking in an Excel file. If I do worse than the basic strategy, because I, let's say, took out the trade, break even, but the market then continued to move in direction, was just only spiking down to the entry price and then taking off from there again, or trading lower, whatever, I write down the result with a minus in an Excel file. And after 1 month, one quarter, half a year, whatever, I count and see the result, which is better. Did I intervene and had a positive impact on the trading, or on the expert advisor and the result which is generated, or do I perform worse? In the first place, so where I perform better, it means keep it up. It's good because it means you make the strategy, which is already profitable in the long run, you make it better. If it's worse, stop it. Don't intervene anymore, because there might be a reason that you're too emotional. What it could look like is this here. So this is just one example. I've taken a screenshot from my trading. So here's the outperformance in R, which means here, for example, that was a trade. I really well remember it. In fact, the first trade, which is really, really positive, because from there, it just got worse. You can see it here, because here I start with 2.2 R, I'm positive, better. And then right now, after some of these interventions, I'm only at 1.05, which means the intervention didn't work out that well. Market conditions also were not that great, let's say, for the approach. But this was an example when I give you a better idea of what 2.2 means. The market squeezed in my direction after the breakout, and I took it out because the market was only trading short to reach my target, in fact, on the upside. And after I took it out, there was a news hitting the wire, which just reversed all the gains from this and then shot the basic strategy into the stop, which means that I'm lost with the basic strategy 1 R, while on the other hand, I made more than 1 R here by intervening here into the trade where I just fell short to reach the take profit level. And so this is just to understand what just happened here. And then, as you can see here, I added up, and at the end, I have a result. This is a positive result. 105. Still, I have to wonder whether all these interventions here, this is not much. I'm looking here at 100 and more, 150, 200 trades, in fact. And you can see it not happens that much that I intervene, but if I intervene, I have to make sure that this really improves the strategy. Yeah, and so this is how an optimization looks, or could look like. Let's have a look here at the summary. So by using automated software like an expert advisor, Forex robot, you might call it, I call it expert advisor, you can benefit from the following advantages: consistent 24/5 trading via so-called VPS, a virtual private server, which means that you're consistently rules-based trading, which means rules-based trading of several markets and strategies with no need of human interventions, which then results naturally in no human, or at least not many human emotions negatively affecting your trading. And then you can also quickly run a backtest on an idea you might have and see if a trading idea is profitable, given good quality, data you're using, solid data, solid connection, good execution, and everything, and then could go for this approach then in the real world. And still, you have to do a lot of work in relation to risk and money management, but also in relation to your mental game if you want to succeed in trading by automating it. So it's not that all these, let's call it mental tripping hazards you might have in your trading just disappear by using an expert advisor, but they could become worse because you're, for example, emotional in your trading already, and you're getting extremely emotional the moment you give up control of your trading by clicking a button, for example. This is definitely something you have to take into account, and which means you have to work really well on your mental game already before, know yourself well, and then take it from there. So, and that's it. So don't forget to join us next time on Wednesday. It will be Marcus here. You will learn more about, for example, psychological, not just for example, but especially on psychological trading mistakes, including what role does your psychology play in trading, what are the common mistakes traders make as a result of their psychology, what are the consequences of these mistakes, and also how can you train your mind to overcome your psychological patterns. And when 2 p.m. London time on the 13th of November, Wednesday, and you're already registered. So you're watching this right now here live, which means you can check your inbox. It's the same time on Wednesday. For those watching this video on YouTube, by the way, if you liked it, please give us a thumb up. I would really, really appreciate it. If you want to, I'm now registered for the live events where you can also ask your questions. Also feel free, if you're watching the recording, to ask them here below this video. Then go to the website atmarmarkets.com, and there to the educations tab, and there to the trading spotlight series. And you can register there for free here at atmarmarkets.com. If you have any questions in relation to what I talked about in regards to Atmar Markets, please feel free to reach out to Atmar directly. They have a customer support, very high likelihood. They have one in your respective language, not only German and English, but several other languages around the globe. And very important, regulated broker. So the risk disclaimer at the end. Thanks for watching. Thanks for your time, and all the best. Talk to you again next week on Friday, so 1 week after World of Trading here in Germany. I look forward to it. See you, and bye-bye.